my favorite kind of crypto story, which is a crypto story that makes no sense whatsoever. This is deep, weird tech stuff, and we're going to do our best to describe it concisely. But as you have probably heard, if you're watching this show, Ethereum is about to undergo a major upgrade known as the merge that will transition the EVM infrastructure to a proof-of-stake based security system. It will cut energy use by 95% because nobody will be able to mine that chain using proof of work, which is the energy intensive security system for Bitcoin and other chains. But obviously miners who have been making money off of Ethereum for many years now are not super happy about losing this revenue. And so a certain portion of them are proposing to continue mining the proof of work chain. I wrote a piece yesterday morning that describes some of the challenges there. And it also parallels sort of some other forks that we've seen in the past, like ETH Classic, Bitcoin Cash, and BSV. Arguably, these forks happen, and generally there's a big loss of economic value in people who bet on the weaker chain. But we'll see how it goes this time. Will, I think you are the person I want to hear from first on this.
Yeah, just fork it and everything will go right. This is a pretty interesting case of going back to 2017, 2018, the BCH and BTC hard fork, where we saw BCH move along, decided we want to have this different protocol parameter involved with our network, and so we're going to move away from Bitcoin. Now we're rerunning it for Ethereum, which has been obviously moving towards proof of stake ecosystem for many years, like since the beginning of Ethereum, 2014, 2015. This was within the design parameters with the Ethereum founders, within the Ethereum devs all along these years. People knew about it, and they've just been waiting for the day for this to happen. Mm-hmm. Now at the last minute, miners are taking this seriously, and they're like, well, we want to continue mining. We want to continue getting these rewards. And it's been extremely profitable to mine Ethereum. And so they want to continue that. Their plan, though, is just to fork the network, make two different versions of Ethereum, Ethereum Proof of Stake, and Ethereum Proof of Work. They're hoping that Ethereum Proof of Work can survive in some semblance of what it is right now, because dApps or applications built on top of Ethereum will choose to stay on the Proof of Work chain for whatever reason. It seems very unlikely this would happen. Most apps have already signaled that they plan to stick with Ethereum Proof of Stake. There doesn't seem to be like a lot of infrastructural needs to be able to change from proof of work to proof of stake for applications themselves. And if you look at the economic value, it's all going to be on proof of stake. Think of stable coins, it's all going to be on proof of stake. Think of DeFi applications, all going to be on proof of stake. NFTs, same thing. All that's going to move to the proof of stake Ethereum platform. This proof of work platform is basically going to have an ETH token, ETH POW, and that token value will be 100% based on if people want to trade it or not. We already saw Poloniex has already jumped on that bandwagon. Justin Sun this morning, I think it was yesterday, tweeted that Poloniex has 1 million ETH that they're willing to use towards the ETH POW community in some semblance, like a donation, maybe of like a small percentage, in order to lift up the ETH POW community. To me, that just signals Poloniex is in the right spot to make some money off of some very, very poor investor traders out there, and they're going to scoop up that money if they can. I expect to see more of this going into the merge as we get closer to that deadline. I think there's going to be more exchanges that list ETH POW, and there's going to be a lot of people who lose a lot of money just by thinking that ETH POW is a project that could succeed in the future. Zach, I'll throw it to you.
I saw Jen's hand, so I'm tossing it to her.
I have a question for David. In the article, you wrote that if this goes forward, it would trigger a wave of truly bonkers speculative trading as people try to profit from the free tokens. Please explain to me what you mean.
Right. So this is an important part of the game plan here for the people promoting this, which is everybody who owns tokens on Ethereum today, after the merge, will have tokens on both Ethereum and the proof of work chain that they're going to call ETH POW. And that means that there are a lot of complicated decisions to be made for people who are holders just kind of automatically. I mean, with any chain split, you in some sense get free money, and that's going to drive people insane. And the hope, I think, or at least the promise, is that ETH-POW will become a real thing. That's what they're trying to get people to believe. I'll put it that way. And so that's where the speculative trading comes in, is that there's going to be forces pushing the ETH-POW token down because, people like Will are just haters and skeptics and think that this is all a sham. I'm not saying these are my words, but some people believe it. And so there will be forces pushing that price down, but that then also creates an opportunity for people who, for whatever reason, might believe that longer term the value will go up. So there will be, after the merge, a period of extreme chop in this market for the ETH-POW tokens. And the smartest people will be the ones making the money. The people trading at size, frankly, will be the ones making the money. And these are my words, retail should be extremely cautious.
I was going to say, it sounds like a beware. We may see new retail people come into the mix out of FOMO, trying to make a quick buck, and then they get wrecked. So don't do that.
Yeah. Zach.
To the broader point, I think just, again, the new economic landscape for the Ethereum ecosystem that could get really strange, but also some interesting game theory kind of going on behind the scenes, right? So the Ethereum Foundation and other core devs are saying like, hey, we're not committing to, an exact date for the merge because we don't want any potentially bad actors to like do stuff that could compromise that transition, right? You have this huge constituency, miners, who are about to have a bunch of expensive bricks on their hands. And it's unclear whether or not they're going to fully participate in supporting this transition to proof of stake. There's been some, and Will has wrote about this extensively, actually. There's been some, peace offerings to them to try to get them to participate and to move along make forward progress to this transition. But what happens up until that moment where it switches from proof of work to proof of stake is still a bit unclear. So some of the messaging is intentionally vague so as to sort of mitigate some of the game theoretical things that could go poorly here. So that to me is also really interesting as we move closer and closer to this expected switchover, whether that's in late September, early October, who knows? We'll see. Will, over to you.
Yeah, I'll give one more thought on this subject while we're still here. And that's about a BitNext research piece that was put out yesterday, 2 days ago, I think, talking about what could happen in a trading scenario for ETH-POW and how everyone is basically going to be taking their ETH-POW tokens. Remember, you're going to get your ETH-POS token, your ETH-POW token. And people with ETH-POW tokens are going to be trying to run towards a door and get out with as much cash as possible. So to David's point, you've talked about this in the article and you talked about it just a second ago, like everyone's going to try to trade this event. And what's going to happen more than likely is that everyone who's very, very good at trading on a technical level, they know how to run an Ethereum node, they know what MEV is, they know how to front run, they know how to program their own transaction. Those people are going to be the ones who win. Everyone else is going to be trying to like trade or swap their ETH-POW tokens, whatever token they have on this other copy version of the Ethereum network. And they're going to try to get that money out. They're not going to get any money though. It's just going to be like a complete failure of getting anything out the door. You're not going to be able to do it in time. It's just how it's going to be. I'm really interested to see that actually occur because there's not really going to be like necessarily any losses, right? Because you basically just got a copy version of your token holdings and you're trying to make cash on top of it. But what's going to happen is we're going to see like the people who are rich and technical already, they're going to get more rich and more technical because they're going to have this experience with the transition at the fork. Jen, I'll throw it to you for our next topic. I think we're going to vacation.
Actually, can I get in one last quick comment, which is just to emphasize, Will said very much in passing. Will said in passing, you have to be running your own Ethereum node to do this ETH-POW trade, and that's just one of the intensely complicated technical elements that would have been a barrier, except that now that it's all going to be listed on centralized exchanges, that doesn't necessarily even the playing field. It might even just make for more retail victims. But the second thing I was going to say, Will, you can't lose any money on this unless you spend dollars on ETH-POW after the merge. So that's the one way you can actually lose money.